The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart that we're going to take a look at today in the Tiger Den is the chart of natural gas. As you can see, we had a really nice ABCD pattern form here about 5 days ago. We've had a small rally, and I mean small. That is not even a 382 of the high from late July. So it's very important that we stay above the 250 level in the natural gas, because if we fail, that tells us we're going to go most probably all the way down to the 215 area. That's the way it would appear to me. Now, we do have another pattern that is completing that is right up the alley of our good friend John Logan. He was talking about this overhead. Whoa, what happened here? Time out here. Something happened. Hold on just a minute. Stay with me here. Okay, back in the driver's seat. Okay, we're taking a look at crude oil now up at this 47.28 level. This is the area where John was talking about his area of a potential supply. And as you can see, there's an ABCD pattern there. It's also a 3-drive pattern. So it's got several things to tell you that's where you are. If you looked at it on the daily chart, you're a little above the 61% retracement, but that's not unusual for crude. As you remember, on the way down, it went about 50 pips below on the downside too. So this is another one that we want to be watching. I've had a request to take a look at Twitter. I never look at this stock, but I did want to bring it up and let you folks show it. One of our listeners asked me to take a look at it. And as you can see here, you know, Twitter back in May made a pretty good low down there at $14 a share, rallied up to 19. And as you'll notice, it came right down and hit a perfect 61% retracement, and then completed the ABCD pattern up here around 21. That tells us that we should be in a correction in Twitter that should equal the BC swing, which happened to be 4 points. So if you take 4 points off of the 21, you should have some pretty strong resistance right around the $17 level in Twitter if it backs off to that level. Now, there's a lot of rumors going around that it's going to be taken over by people, but here again, that's all those are is rumors, and that's not what we try to do here. Now, I did want to mention the euro here because we've had some interesting things happen to the euro. Yesterday when we were on the air, we were talking about this pattern potentially completing up here at this 113.40 level. Thus far today, that has been the high, 113.40. It doesn't always, really come out that it hits those numbers exactly, but this time, so far today, and it's again, this is very, very early to determine whether that's going to be the case or not, but it hit it spot on, and those are the kind that you kind of want to watch if you're looking at them, real closely. Now, I'm going to switch over to the metals here a little bit because we had something very interesting happening yesterday in the platinum market, because we still got a chance of this gold and silver bottoming out here. But if you'll notice, yesterday, the day before yesterday's low, was a perfect 382 retracement of the low we made in June. I mean, just absolutely spot on. And when that happens, you have to pay really, really close attention to it, because we did back off $100 an ounce from that 78% and 1.618 expansion number that we hit over a week ago. So there's a chance here that this metal could really take off to the upside. So I'm really of the opinion that we're going to be going lower in gold and silver, which I'd love to see it, to see the gold down around the 1280 level and silver around $18. I would really like to buy them there, but whether they get to those prices or not it just remains to be seen. So those are the things that I'm trying to watch. I've had a request to talk a little bit about the soybean market. What I'll do is I'll put up a chart here on the soybeans and let you take a look at it. This is a 4-hour chart going back over the last month, and as you'll notice here, that we're making pretty much a 38% retracement with an ABCD structure that is just about perfect. You can see the head and shoulders pattern on this chart that we talked about earlier in the week when Mr. Z was on, because we've had a pretty significant bottom, we believe, on the daily chart in soybeans, but on the intraday, that means we're getting ready for a correction that could bring us down to about the 975 level. I don't think it'll drop much lower than that if it's bullish. Anything below 950 would certainly tell us that this market is in deep trouble, and we're ready to go higher, or excuse me, lower if we get below that 950 level. That's the way it would look. Folks, I was going over some things last night, and I ran into a book that I wrote about 20 years ago when I was down in Vicksburg, Mississippi. My best friend Jay Crosp, who had worked with Amos Hofstadter for 4 years at the beginning of Commodity Corporation. He was one of the original programmers there. He had went to school at Mississippi with Trent Lott, who was the former Speaker of the House, and he got a master's degree in computers from the University of Southern California. Anyway, Jay and I were down in Vicksburg looking at this old bed and breakfast inn that was an old antebellum house. It still had the cannonball holes in the place from the Civil War, and it was really dilapidated. It was set up on a little hill overlooking the big park, and it was for sale by the city for back taxes, and Jay wanted to buy it and turn it into a bed and breakfast inn. And man, I could see it like it was just like a boat. You just have it's just a bottomless pit for expenses. Anyway, he talked me into it, so we went in together and we bought this place for almost nothing, and then we started remodeling it. And of course, he really loved to do that kind of stuff. And I personally didn't, but just hanging around with him was fun. But he would go down to Natchez, Mississippi, and find these old artifacts to put in this place. And after a period of about 2 years, it finally got completed and everything. And about a week before it was scheduled to be completed, some dude from New York came in and made some ungodly offer on the darn place. And so we sold it, and it's still there. And I haven't been there for a long time. But anyway, during that time, Jay had told me stories about Amos, and I'd met Amos a couple times through Jay over the years. And I started writing a book with Jay's help about it. And I went to North Carolina to visit Amos's daughter, Janet. And her brother, Buddy Hofstadter, is a guy that started the cell towers for cell phones and also for cable TV. That was his big thing. He started, I don't know if he started Comcast, but it was one of those large companies, but he made a couple of $1 billion. He did, and it was just really, he's tremendously successful. But anyway, I spent some time with Janet. She told me about her father, and I wrote all these things in the book, and she gave me some pictures and other things, and I've got this book ready to go. One of these days I'm going to bring it out. I've never published it, and I just kept it on file, and it's got some great information in it. So anyway, we'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to be taking a look here at the dollar index. We've reached down to this 786 retracement as of this morning when we hit the 113.40 level. In the euro, and we hit the 95.70 level in the Swiss franc, and the British pound hit an absolute perfect 61% retracement at 131.70. So that was the reason for that dollar index to hit that spot, because if we happen to get much below that area, we're going to be looking at a real serious move down in the dollar. The key here is we've had 5 ratios form. As you can see that we've marked those off in red. That means there's 5 different swings coming together at the same time. Those are the same as looking at a cycle point. So that's the key to this. The more numbers you have at any one point, 5 is about the most you can possibly have, and that's what we have going on in the dollar index at this particular time. So it's a very, very important spot to be watching as near as we can tell from the foreign currency section here that we're looking at today. Now, we've had some earnings come out with Walmart. That's due to be a little bit higher. I did want to go over a little bit about what happened yesterday in the market. As you recall, we were looking for the market to come down to make some really nice support down there at that 2164 level where we had the ABCD structure. And of course, we had the Federal Reserve in there with their open market meetings. And of course, they always make the market, move a great deal. And if we take a look at it after that report, you'll notice that we went down to almost the exact number. We came within a half a point of the exact number we were looking at. We were looking for 2165. We got to 2165.50, and then as you can see last night, we rallied up to the 61% retracement up there at that 2181 level. We're trading a little bit below it, but really not much happening going on. The same scenario occurred in the Dow Jones E-Mini and also in the Nasdaq E-Mini. They did exactly the same thing. They went down to those major support points, and then what we mean by support points, those are the 618 or 1.618 expansion numbers that we look for, and that forms a support of what we're watching. It did that, and then it rallied back. So today's going to be an interesting day, like every day is. But if we close below that 2164, then we're going to be looking about something a great deal more dramatic here in the market. That's the primarily thing that I think we need to look at. Now, someone asked a question yesterday about Paul Tudor Jones and his company, getting rid of 15% of their employees. That happens to only be 60 employees, so that's not a big deal. If we take a look here at BlackRock, these are the big daddy rabbits in the pool here, folks. When they go swimming, the sharks get out of the water because these guys have $4 trillion under management. And as you can see, this stock has been very, very strong, and they're not laying off anybody. So BlackRock is still in play, looking very strong. But, it's a totally different picture in some of the other hedge funds where the business is not as good, and it makes, they have to get rid of people. Look what happened at SAC Capital with Stevie Cohen. I mean, just because he couldn't manage a couple of his traders, he's banned until 2017. Steve Cohen gets 50% of the profits, folks. I mean, that's just an unheard of amount in business, but they line up to give him money. So he's very, very good at what he does. And he's one of those savants that understands, what's going on in the market almost all the time. So he's why he can command those particular prices. He will be back big time eventually, but that's neither here nor there. Now, I've also asked to talk a little bit about the volatility that we had yesterday in the gold market. I wanted to bring this up and show you. This is a 15-minute chart on gold on the August 16th. Of course, 17th was the day of the Fed. But if you'll notice here, in early morning, we made a beautiful rally back in gold up around that 1357 level, and that set up the ABCD pattern that brought us to that Fed low at 1341. And then, of course, after that time, the market rallied all the way up, going a little above the 78% level at 1360, and then it since backed off, to 1351. With a very, very small ranges right now, because these things happen so quickly, as you can see by these wide range bars that we had at Fed time. And that's mainly because of illiquidity, folks, because people pull their orders during that time, and there's just not a lot out there. And if you happen to be on the other side of it, that's not a very good feeling. So you've got to be able to structure your trading to trade around those numbers. It's nothing wrong with putting your numbers in at extremes, but that's the way you'd like to do it. You don't always get to do it that way, but that's the way you would like to do it. Now, the other one that I wanted to mention here happens to be the silver market, and we'll bring it up here to let you see that it's acting a little bit differently. In fact, it's acting a lot different. You'll notice we did have the spike down, which was another 20 cents, roughly $1,000. That basically got you down to a 1.618 expansion of the move from the 12th through the 16th of August. And now you've come back, and all you've been able to do so far is to rally to the 50% level of the high that we made back on the 10th. Now remember, the gold took that high on the 10th out by $1, but we didn't do that in the silver, which is telling us it's a little bit weaker. So what I'm trying to do is to show you that we're in this trading range, which you can see it if you look on your charts, but these are the reasons why. The increased volatility during Fed time is due to the fact of illiquidity, but people don't have their orders in at that point, and that's what makes it, really, really difficult, to try to understand, what the market's doing. And you really have to get down to a smaller time frame, in order to really be able to look at that. Since we were looking about the S&P, I've had a request to take a look at the Dow Jones E-Mini, and as you can see, the same thing here. Yesterday we pulled down to a 1.27 expansion of the low from August the 12th. It was almost a perfect 78% retracement from the low on the 10th, and it was a 38% retracement from the low on the 2nd. So this market is still in a bullish mode. John Logan, brought that out, that there's no reason here to be aggressively short. And but this is a place where if you're right, you're going to do pretty good. But if you're wrong, you're going to be looking at something. It's going to be a whole lot different. Now, I wanted, since we were looking at crude oil, we also want to take a look at the Canadian dollar, because crude oil has a 85% correlation with the Canadian dollar, and as you can see here, this is what we're looking at here. This is the Canadian dollar. The green line is the inverted price of oil. In other words, it's a price of oil turned upside down. I should have inverted the Canadian dollar versus the oil, but I did it the wrong way. But in other words, we're making a pretty significant bottom in the Canadian dollar here from this level, which means that if we are correct, the crude oil should be making a nice top in here. That's the way the technical part of it is. Now, whether it works that way or not, you have to wait and see. Anything above $48 a barrel would tell us that there's something wrong, with this. But there should be a lot of resistance in this 47.28 to 47.80 level. But anything above 48.01, 48.02 in the crude oil would most tell us that this pattern has gone beyond where we thought it would go. Okay, we'll be right back right after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted a nice little thing from Ripley's Believe It or Not. I don't know if it comes from Ripley's or not, but it should be. This basically talks about when Richard Fuld, who was the former CEO of Lehman Brothers, how he was telling how everybody was going to be okay, and the financial and strategic potential of new business that the firm had been building was absolutely unbelievable. And then if you read below that, you're reading the same thing of what the guy, John Cryan, is telling us of Deutsche Bank, that things are really good and everything looks really, really terrific. So they might change the game a little bit, but the song that they try to sing to us has not changed very much at all. That's that's pretty much the bottom line of what we're watching here, because it looks really bad. If you take a look at the Deutsche Bank chart, and this is the largest bank on the other side of the Atlantic, folks. This stock has been going down for years, and look at it, just nothing but lower tops and lower bottoms. It just really, really unbelievable. If we get below that 1.618 expansion at 11, that should bring out the too big to fail group, because Germany is not going to let this bank go under. That's the equivalent to the Bank of England for Germany, but you just don't know what's going to happen. When you see a comment from their Prime Minister, Andrea Merkel, saying that she couldn't see where bringing in 1 million Syrian refugees had anything to do with increased terrorism. I mean, I don't know what planet she's coming from, but she might want to rethink about that a little bit, because there might have been one or two in that group, but who knows? We'll see. That's neither here nor there. Let's get back to the markets, because we do have, things to cover today that are, I think, pretty significant. We should have some pretty strong resistance at the 78% level, at the 2185 level in the S&P, and that's neither here nor there. Whether that's going to occur or not, we'll have to wait and see. The one that's looking really poorly, folks, is the Treasury bond market. We've been saying this for quite some time. We're down to almost really key support, the 71.15 level, which is the 61% retracement of yesterday's range. And, it's just trying to hold this level. Whether it's going to continue to do it or not, we'll have to wait and see if that is in fact, really going to happen or not. This is still a little bit early in the game, as we all know, but we'll wait and see. Now, we talked about the grain market just a little bit. Longer term, I really think you have to take a look at, buying that corn. Christmas corn's trading at around 338 right now. If we get that corn down to around 331, I would really like to become a farmer at that spot and risk about 10 cents, which is $500. It's certainly cheaper than, owning the land or leasing the land and, renting the equipment and borrowing seed from the bank and all the other stuff that you have to do. All you have to do is buy a futures contract, and then you're ready to go as far as becoming a farmer. But I think corn would look really good at that point, because as we've seen before, this long-term chart on the December corn does have some favorable implications, much like what we had with the soybeans when November soybeans got down to that 940 a bushel level. Now we're trading around 10, and we could back off to about 980, 970 without any trouble in the beans, and those also would be interesting. But that's something that you want to wait on. They're not there yet, so you just have to do one thing at a time, and that's probably the best way to do it. I spoke to Tommy O'Brien, Tom's son, yesterday, and it looks like we're going to be doing a webinar, hopefully, in a week or so, where I'm going to go over some things that I've been working on over the years on how to look at electronic tape reading compared to how it was back in the days when we used to have the ticker tape coming across our desk. Learning how to trade against major market reports like the non-farm payrolls and the employment reports. Also, one of the best trades you can have is one that has an 85% probability of working. We're going to be talking about that one also. How to use multiple time frames when you're trading. That's another thing that's rather important. And then also the important use of stops. And that brings in, the mental part of trading, which is also important. And you got to think, you have to listening to the whispering of the market, what is really trying to tell you. And that's always a difficult thing to do, because if you have an opinion and the market has a different opinion than you do, that's where the problems arise. And you've got to try to work through that, as a trader, to understand that's what your edge happens to be. When that edge is gone, you literally have to get out of the way. I mean, there's just no other way to look at it. So that's the real key. Now, I wanted to mention, since we were talking about the dollar just a little while ago, I'm jumping around a little bit here because I see prices moving, but as you can see, this is the Swiss franc over the past 5.5 weeks. And as you can see, we have this big ABCD forming down at this level here of the 95.70 level, which it's held so far this morning several times. That's the equivalent of when we hit the same thing in the euro at 113.40. Those have a weighting in the dollar index, but the U.S. dollar index is weighted by the euro by 53%. I think the Swiss franc has got about an 8%. And if we look at the Japanese yen, you're seeing the same type of thing. But the problem with that is it's not weighted nearly as much. And if we look at that, you're going to see the same thing, a pattern completing, but it's not doing nearly the same as far as the weight in the U.S. dollar index. Folks, all I know is if that U.S. dollar index ever gets above 99, it's going to go to 105, because it's got so much stuff there that it's really quite amazing. Well, we got a caller today, Robert from Chicago. What can we do for you, my friend?
Hi, Larry. You had one of your great traders calling yesterday, Brent from Martinez, and you mentioned that Procter & Gamble had a certain pattern.
Yes.
I guess my question is, at what price on the upside might that pattern not work? Okay.
As a matter of fact, I spoke with that. His price, he would be looking, if it gets above $1 from where it is right now, it's trading at 87.17. And if it gets to 88.17, that would be a failed trade, and he would take his 1-point loss and get out of it. But it's 88.17. He entered it at 87.46. And if it gets to 80, I think it's 88.46. So it's about $1.20 from where it is right now. 88.46 would be his uncle price, where he gives up and moves on. But that would be at 88.46 in Procter & Gamble.
And so, Larry, could what kind of chart are you looking at? In terms of his monthly, daily?
Oh no,
weekly?
I'm just looking at a daily. What I'll do here is, let me just give me 1 second, and I will put this into the room so that you can take a look at it. And all I did was I put the ratios expanded that we had chatted about yesterday, and we'll take a look at those right here if we can get the right chart. There it is, right here. Hold on just a second. I'll be able to get this up, and everybody will take a look at it. And all I did was I went from the previous swing that we had from July the 14th down into the 25th. That was a 9-day move down. And then the expansion on the upside, you see, went right to 1.27, and that's where Brent was selling yesterday. He had a 2-point profit in it at one time, but now the market's rallying back today. Stay with us, Robert, okay?
Thanks, Larry.
Stay with us.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're talking with Robert from Chicago on Procter & Gamble. What I've done, Robert, is I posted into the Tiger Den the pattern that Brent was looking at. As you can see, it's a 3-drive pattern with the perfect ABCD up there at the 87.56 level. And you'll notice above there, you'll see the 1.618, and that's where his stop would be. So he's risking just a little over a point on this. And, of course, he had a 2-point profit in it at one time yesterday, but he's looking for a lot more than that. He was looking for the market to come down to at least the 83 level. Right. So what he's looking for is at least a 3-to-1 risk to reward ratio, and that's what his whole strategy was.
Okay, that's great. It was working in the morning, and then the afternoon it kind of turned around. So I was curious.
Yep. That's all related to the Federal Reserve. You know, when they come out, the whole world has to listen to what they say, and whether that's right or not, that's how the markets respond to it. But as we've seen many times before, as of yesterday, of course, you know, we've been able to see that these markets react very violently whenever the Fed is doing anything. So it only last a couple of days, but, you know, if you intertrade, you still have to protect yourself.
And Larry, what price on the downside would you think that Brent might be right and would continue falling towards 83?
Oh, if it takes out if it takes out that low we made yesterday, that would certainly do it. You know, that would be a really, anything below, you know, that 83 level, not 83, the 85, I believe. 85, anything below 85 would certainly trigger a move that would take you down to probably between 83 and 82.
Great. Okay, Larry, thank you very much.
Thanks for calling in, and be sure that you walk by the Chicago River today. I love that place.
Oh, Larry, when I was younger, I used to always go into the. I probably saw you on the trade, on the Board of Trade, the CBOT, and they had a visitor center up there. I used to always, in college, look down and check out all the traders.
I never liked to go into the pits. What I did is I stood at the very back of the pits. I was afraid of out trades, you know, where a trader would do a trade with you and then not recognize it. And so I handed all my paper in, and I had Ricky Lawrence filled all my paper for me, and I never had an out trade in the 2 years I was there after him. I had two the first week, and then after I started using Ricky, it was no problem. It only cost me $2 per car. So if I did 5 cars, it only cost me $10. Well, when I was at Drexel, even with my discount, I was paying $30 a car. So, this was a real easy way to look at it. And that was one of the reasons why I was down on the floor, was to see that, this was going to be really equitable and that it was done fairly. And I found that it certainly was. 99% of the time, it was a very, very fair place to do business. The man's word was his bond there. And if it wasn't, you were out of there in a matter of a few weeks, because nobody put up with it, that's for sure.
That's right. Names like Staley, Continental Grain. Iowa, wasn't it Iowa Grain? And
oh, yes, that's
yeah.
Many of those firms, were absorbed by other people. You had just so many of them that it was just unbelievable, some of the old firms that were there. And it's totally different now. So it's controlled by the big corporation and the banks. And that's the problem that we're having because of the Glass-Steagall Act, but that's neither here nor there.
Well, thanks very much for your analysis, Larry.
Hey, it's my pleasure. Always nice talking to you, Robert, and may God bless.
Thanks.
Okay. All right, folks, we're going to be back here a little bit to talk more about that Deutsche Bank, because I really believe this has got a possibility of being the outlier event in Europe, if in fact it does happen, because the stock certainly looks like it's heading down another 30% to the $11 a barrel level, which is the 1.618 expansion. So that's what it looks like from this area. So this morning we see how we're doing. This morning we've had a little bit of a rally, got up to the almost a 2182 level, done very, very little at that point. See, crude oil's got as high as 47.65, about 40 cents higher than John Logan thought it was going to be. So if it doesn't work, folks, John Logan's phone number is 555-551-5551. So you can reach him on that number and complain to him about it, because I only did it because it certainly looked like a really nice level that he was talking about there. And if you believe any of that, you're ready to start voting in the November election. And believe me, this is going to be a fun one, because it's going to be really interesting to look at. I happened to speak with one of our famous astrologers yesterday, and he assures me that it's going to be a big surprise. So I don't know what that means, but we'll learn a little bit more as we get through it. Boy, I've been around for a while, and I tell you, it's been just truly amazing to see the stuff that goes on in these markets and in the political arena, of course. Okay, now let's get back to the euro, because I wanted to show you the thing that I thought was important, since we're looking at that U.S. dollar, and we'll take a look at this here. As you'll notice, we've had lower tops here in this euro over the past 3 months. We made the 78% retracement of the Brexit high, which is at 114. That came in at 113.40 today. That was the exact high of that number. Now, should we get above 113.40, this is going to tell us that we're most probably breaking out to the upside and could go substantially higher. So that 113.40, 113.50 is really important. That equates to what's happening in the U.S. dollar, because if the U.S. dollar holds the 94.20 level, which so far has been the low, that means that this is nothing more than a nice ABCD correction in the U.S. dollar, and we could start to see the dollar move higher. So this is why it's such a critical day. And guess what day today it is, folks? This is the lunar eclipse and the full moon. It happened at 5:53 this morning, and we'll see what happens, and we'll see what's going on, and we'll go from that level. I will share some of my experiences down on the floor as we go through some of these things, because I know you get tired of just watching these darn patterns, because I do them all the time, and I never get tired of them. But I'm sure you folks listening to this, you get tired of hearing ABCD and 1.618 and 1.27 and 78% retracement. So I'll try to, bring some of the stories that I learned through the years. Fortunately, I had a lot of friends that were down on the floor, and we had multiple ideas and experiences through that time. So some of them are quite funny, and some of them are actually quite sad. That's the main thing. I should tell one here. One day Oh no, I better not do that. This is a lunar eclipse day. We don't want to do that. We'll save that for another time. But we'll talk about other. One day, Byron Tucker and I were trading in the T-bill pit, and he grabbed me and he says, "Quick!" He says, "We got to get out of here." And it was really crowded. It was a report day, and we went up to the gallery, looking down at the pit. And when you saw the pit, it was waving back and forth like a wheat field. And he said, "It's going to tip over." And I said, "How do you know that?" He said, "It's got too much energy." And a few minutes later, you could see the energy going back and forth between the buyers and sellers and yelling and screaming. It was just a giant wave. And all of a sudden, whoom, the whole pit fell over. And believe me, guys were falling down and still trying to make trades. And even when there were broken bones and stuff, they were still trying to trade all through that. But it's really amazing. You know, they have some pictures of videos. Well, they're not videos because we didn't have YouTube and stuff like that, but they did have some pictures of the pit tipping over back in those days. I think they're still in the Merck archives, but if you ever get to the Merck and go through the period, you could see some of those pictures. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have to get our trading hats on here because we've got a situation possibly in the corn because we've sold off about 7 or 8 cents from the high. We bought that corn the other day at 33. We got out of it yesterday at 40. And I think it's got a chance to back off here down to this 333 area and actually give us a pretty good chance to get in it if, in fact, we do get to that level. But it looks very interesting anyway, because the long-term picture on the corn appears to be rather sound because of the 1.618 expansion that we made, and then the fact that we had a very, very bearish report in corn a week ago Friday, and the market reacted very, very dramatically to the upside. If we take a look at soybeans, I just want to show you the same picture in beans, because even though they're different products, they trade pretty much the same way. And if we look at that, you'll see that the beans here could possibly equal the last correction that we had into that right shoulder. And that happened to be a total of 40 cents. So if we take the 40 cents down from the 1020 area, we could easily get to the 980 area without any trouble at all in the beans. And that would be an area where you'd want to be watching to potentially, to buy the soybeans. Because at that point, you would have a 135 expanding triangle, and then you'd really have something that you'd really be able to look at as far as a really good support area in soybeans, to take a look at that, because that's the way that it looks. Right now, we're trading at 9.98, so we've got about another 18 cents to get down to that level, but it's got a possibility of being able to be a really good trade if we get to that point. It might take a day or two to get through that, and I certainly wouldn't buy it on a Friday. I'd wait to Monday to see what happens, but those are the two from the grain complex to sort of keep an eye on, because they have a potential to be some really strong bullish implications here, and you want to watch to see how the market actually turns and moves in that direction. So that's another one that we want to be watching. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.